So Fibonacci extensions and retracements are some of my favorite tools to use when trading. Fibonacci is a mathematical sequence that we see everywhere in nature. And it actually, in the markets, you can really apply chaos theory to it, as in there is this seemingly random order of events and chaos in the markets, but there is also a type of order that comes out of it, whether it's self fulfilling through humans or whether it's just a natural order that plays out. You can often see things kind of matching up perfectly with Fibonacci extensions and retracements. So Fibonacci extensions are generally good for measuring trends. You can use them to measure future price action on the chart to determine levels. So let's say you have some uncharted territory and you're not sure where the price is going to go because there's no prior price discovery to base it on. And you can use an extension to kind of measure out levels. You could also use it in known levels as well, but it's generally good for extending out two trends and finding targets. So over here we have the Fib extension tool, and you'll notice a very interesting sequence here. So what you do is you anchor it to the bottom of where the base was. You bring it up to the top, and then minus the retracement. So minus the first major retracement. And you'll notice something interesting here is that the next major level up is exactly around the 1.618 area. In fact, I could probably even just pull this down just a little bit more. Right there. And, you know, it's not like it's going to necessarily hit these areas on the nose, but sometimes it does. So this basically just extended out to 1.618 area. All right, so now let's measure the next Fib extension. So I'll just remove that. So the next one, you measure the bottom, bring it up to the top, minus the retracement. And here you can see it pretty much hit the 1.618 area. Again, hit resistance at that area. Let's measure the first run up. So what we'll do is we'll measure it off of the bottom. So this, whenever you have the bottom of a trend here, this is called a capitulation candle. What capitulation is when traders give up, when they finally let go and the last bag holders just dump. And that usually signals the bottom and a reversal. So obviously if you're buying low and selling high, then you probably, as long as the fundamentals are strong, it's probably not a bad idea to buy on capitulation. Now, so we see here on this capitulation right there, this went up higher than 1.618, so it came up to this level, but it was still generally a decent enough target, right? So you don't always necessarily have to nail exact tops and bottoms, right? You can also just get the meat of the trade as well. So, and you can see from this point, this is well over a double, right? If you were to buy on capitulation there and you were just to hold until an extension, obviously this took 11 months to get to that point, but the price basically from that capitulation candle up to the top pretty much went up about 200%. So that's definitely not a bad ROI. Now let's measure it on the downside. So if you want to measure a downside for a bear trend, you do the opposite in the opposite direction. So instead of starting at the bottom, you start at the top. So in this case, Let's measure it just on the larger move here. See where this goes. So the top, anchor it down to the next major bottom, minus the retracement. So you can see this is a bigger move. And the market never went all the way down to 1.618 extension, but you can see various different fib levels. So you can trade based on various different fib levels and identify different Fibonacci levels, right? So those are fib extensions. We'll just do one more. Let's do one on this area right here. Right, so we can see 78 level, 61.8% level, various different fib extension levels. Now let's look at Fibonacci retracements. And Fibonacci retracements are actually really, really good for being able to quantify known areas, right? Like, so for example, if you wanted to measure an uptrend, right? One of my favorite areas, I call it the sweet spot, is between the 61.8% and the 78% level. So if you want to measure a bull trend, you start at the bottom from where it started and you anchor it all the way at the top. And this will just allow you to quantify certain areas. So as you can see here, we've got multiple good kind of dip buying areas right in through 61.8%. Right? So if you were to buy a dip here, it bounced, buy a dip here, it bounced. Even here, even though it broke down slightly below, still in that sweet spot zone between the 61.8 and the 78, it bounced. And then finally, once it breaks down below these levels, you can see that it breaks down below support here. And that's where we started to move towards capitulation once this support level broke right there. Right? Now, I often like using fib retracements to also measure dumps as well. So that's measuring a bull trend, but let's look at that if you're looking for good shorting areas. Nice bounce plays to short. So let's say you measure the top here. So we've got a bit of this double top right here. But let's say we're to measure this dump right here. You see that it creeps up between 61.8 and 78% area, and then it rolls over and breaks down. And then we could apply that to even larger areas, right? When you get a new bottom, it falls right into that sweet spot again between 61.8 and 78, and then it rolls over, breaks down. So these would all be generally good areas to short. Now let's back test this and look at some other areas. And you know, this doesn't always have to be the case, right? I mean, there are exceptions to rules. We're just dealing with probabilities and possibilities. Nothing is guaranteed in the markets, right? But let's say I were to measure this top to this bottom right here. All right, so in this area, it only went up to like the 50% retracement level right there. All right, let's look at this dump right here. As you can see, came right up to the 61.8% level, and then it kind of rolled over. So you've got this big kind of bear bear flag pattern before it breaks down and rolls over. So, if you were to just kind of measure the breakdown on this, here's the breakdown, and there are different areas where you could short. You could short right at that 61.8 level. You could add to it on confirmation of a breakdown. So there's different ways you can play that. And so even here on this most recent run up, so we had a massive washout and the price creeped up at the between the 61 and 78% level, and then just kind of pulled back about 3 fib levels down. So so that concludes this lesson for Fibonacci. I'll see you in the next lesson. Cheers.